be frank!
Welcome to Let's Be Frank, a weekly podcast that gives a quick take on U.S. stocks from the perspective of a value investor. I'm Brian Frank, a professional investor with over 20 years' experience specializing in small and mid-cap value stocks. Every week, I'll cover what is working, what isn't working, and talk about the value we're finding on the hunting trail. Find out more at frankfunds.com. Now let's get to it. Today is Friday, July 31st, 2026, and we had some massive volatility across sectors this week. A popular hedge fund, Situational Awareness LP, added to the volatility, becoming victim of a forced liquidation that marked the bottom for momentum this week. Enough ink has already been spilled about situational awareness, but I would like to comment on the market structure that allows this story to repeat itself. Investors and the media love the idea of a visionary fund manager, proliferating the story throughout social media and helping these star managers raise even more capital. In 2021, the manager of the moment was Cathie Wood, investing in so-called innovation stocks. CNBC and the media outlets loved the story, endlessly blaring out Wood to the masses for free advertising. In the past 5 years, ARK, which is Cathie Wood's ETF, has lost in excess of 9% per year. The system led the lambs to the slaughter. Meanwhile, if I could be so bold, my fund, the Frank Value Fund, has returned over 13% per year in the same period. But because what I and many other disciplined investors do is perhaps less exciting, our message is limited and our investor bases are smaller. Perhaps there is hope if you are listening to this, and make no mistake, I am thrilled and humbled to help my smaller base enjoy outsized returns. That brings us to what worked in value. During the momentum meltdown, companies like Coca-Cola had solid earnings reports and significantly outperformed the technology-heavy indices. As I've mentioned over the past several weeks, reversals are many, and Thursday and Friday took some of the shine off staples prices, but to me, the fundamentals still look way more solid than momentum. What didn't work? Buying momentum with leverage certainly didn't work. Anchoring to a price rather than a valuation on most momentum names also didn't work. I continue to believe we will see many attempts to rally momentum, but I think for many of the AI infrastructure companies, the top for this cycle has already been achieved. Next up is on the hunting trail for value. For most of July, I have stuck with my existing portfolio, trimming my outsized positions in consumer staples on rallies. Just today, I spent some of the cash in the communications sector, but we haven't publicly disclosed the position yet. Outsized volatility creates opportunities in fundamentally sound companies, and although it can be difficult to act on days when your target stock is plummeting, the long-term value for some of these names looks great. Wrapping up, momentum has been extremely volatile while value got some respect this week. Earnings season has been kind to consumer staples so far, and I am grateful for a consistent process to help me navigate these large moves. Thanks for listening and have a nice weekend.
Performance data quoted represents past performance and does not guarantee future results. The investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be lower or higher than the performance data quoted. You may obtain performance data current to the most recent month end by calling the Frank Value Fund at 1-888-217-5426 or visiting our website at frankfunds.com. Returns include reinvestment of any dividends and capital gain distributions. Non-FDIC insured, may lose value, no bank guarantee. The fund's investment objectives, risks, charges, and expenses must be considered carefully before investing. The prospectus contains this and other important information about the fund, and it may be obtained by calling 1-888-217-5426. Please read it carefully before you invest or send money. This publication does not constitute an offer or solicitation of any transaction in any securities. Any recommendation contained herein may not be suitable for all investors. Information contained in this publication has been obtained from sources we believe to be reliable, but cannot be guaranteed. The information in this publication represents the opinions of the individual portfolio manager and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Also, please note that any discussion of the fund's holdings, the fund's performance, and the portfolio manager's views are as of the recording date and are subject to change without notice.